There is a big rotation going on in the stock market, and it looks pretty healthy as money is finally broadening out into some other sectors, particularly beaten up sectors. But at the same time, we ended the week with market breadth delivering a fresh warning. It's a big fade. I'll get into it soon. But first, let me tell you, this is TLDR Stocks, where I explain to you what happened in the previous week so that you're ready for the next week and the weeks following. All right, let's take a look at my favorite technical indicator, the percentage of stocks trading above their 50-day moving average, is what I like to call ATIP50. It is the measure of market breadth that has me worried. Okay, this is the overbought level, 70% on AT50. You can see right here, it punched through and then faded the next day. When it has this kind of behavior and it goes back below the 70% threshold, that is bearish. But as I will show you now, I can't quite get bearish because none of the indices look bearish. So all of the bearishness is really underneath the covers. Let's take a look. S&P 500 started the week. We had all-time high, just very barely incrementally, and then just churned. Support is still there, 20-day moving average, 50-day moving average, and so on. Same thing with the NASDAQ. Although the NASDAQ hasn't made an all-time high since October, you can see it is above its 20-day and 50-day moving averages. But the big story for me, finally, the small caps, IWM, the ETF of the small caps, is having a great performance, and it's definitively outperforming the other indices. It's been a long time. I've been waiting, and finally here it comes, just as market breadth is delivering a bearish signal. All right, let's take a look at the individual stock charts that caught my interest for the week.